Blackstone is on the brink and they can't hide it anymore. They've just released their financial report for 2023 and they've witnessed a catastrophic 65% drop in their operating profits over the last 2 years. Their flagship product, the Blackstone Real Estate Investment Trust, has been getting hammered by falling property prices and investors running for the doors, and their CEO and founder has used this downturn as an opportunity to reap the company for all it's left with, taking out billions in income at the exact same time as Blackstone's core business is failing. This isn't something you're likely to be surprised by, as Blackstone have been having this continued problem for well over 2 years at this point, and it just keeps getting worse. It all started when the pandemic took hold and property prices started to get inflated by the government's money printing. Blackstone realized they could use this event to falsify their own success. They started buying up billions of dollars worth of commercial real estate, and a few months after they bought each property, they turned around, had it appraised again, and magically it had risen in value by millions of dollars. They did this over and over again with seemingly no desire to hide what they were doing. We're talking about hundreds of billions of dollars worth of property here, and appraisals carried out by Blackstone themselves where they get to decide how much those properties are worth. And sadly, this worked. They ran this all through BREIT, the Blackstone Real Estate Investment Trust, and they shouted their results from the rooftop, and soon enough, they were one of the largest REITs in the entire world, controlling well over $100 billion in assets, with nearly as much in debt taken out on top of those assets as well. And while Blackstone's profitability during this time was totally insane, they weren't the only firm buying up real estate. Countless other firms bought property at a rate as quickly as Blackstone, but for some reason, every other company in the world failed to see their own property prices rise as quickly as Blackstone's. If Blackstone bought an office block down the street and another REIT bought an identical one next door, within a year or so, Blackstone's property would have magically increased in value by a great deal more than the other. How can a company possibly buy hundreds of billions worth of property and still outperform the market? Well, the short answer is they can't. They simply wrote down bigger numbers onto their ledgers, and then they claimed massive profits that hadn't ever been materialized. They published huge numbers, got loads of positive PR from those supposed numbers, and saw billions move capital flow into their funds from investors all over the world, desperate to get in on the bubble. And then as the pandemic slowed and the money printing stopped, suddenly commercial real estate values started to tank from their incredibly inflated values, but Blackstone's values were the most inflated of all, let's not forget, and so they suffered greatly when the commercial real estate market turned around. Rents reduced across the board, literally millions of offices currently lay vacant, with no real prospects to rent them out, as the market for office space has simply been decimated as a result of the work from home developments. And investors knew this as well, and they saw the writing on the wall, so they began selling their positions in BREIT, or at least they tried to, because BREIT relies on investing into large properties and renting them out. So liquidity can be an issue, and so they have it written into their contracts that they only have to let out a certain amount of investment each month, something called a redemption limit. And with so many investors running for the doors, desperate to get out at the top of the bubble, that redemption limit was met back in December of 2022, and then it was met in January as well, and February, and every single month in 2023, and even on into 2024 as well. This was a bank run in all ways except name. The only thing stopping it from being a literal bank run is, well, Blackstone isn't actually a bank, but the effect on their brand, their profits and their investments were no less devastating. And you can't really blame these investors for running for the doors either. Blackstone started to default on many of their debts as well, and not by small amounts, but by well over $1 billion. They simply stopped paying some of their debts while simultaneously claiming that all was okay. And as this situation was still developing, Blackstone's CEO and founder seemed to be taking everything he could out of the company, taking home $1.3 billion in compensation over 2022 and another $900 million throughout 2023. That's at a time where their flagship product was falling. Their revenue from that flagship fund fell by more than 50%, and their profit fell by 65% as well. Revenue fell from $6.8 billion in 2022 to just $3.4 billion in 2023, and let's not forget the BREIT itself saw its market value fall by more than 4%, while one of the riskier funds fell by a further 6.3%. This is an awful blight on what was Blackstone's impeccable record, never providing negative returns throughout a year for BREIT's entire history until this predicament all kicked off. You'd think at a time like this, the founder would be keeping his money in the business, trying to ensure it's built up an appropriate buffer for any further problems coming its way, or even just to show solidarity with those working at the firm, But no, Schwartzman is content to pick the coffers clean and make off with as much loot as he possibly can. Now the entire company is undergoing a major shift as it tries to find a path out of this self-inflicted failure. Back in December of 2023, they announced that they would be targeting young Americans as a new untapped demographic to sell investment products to. The only problem with that is that young Americans hate Blackstone with a passion, and they don't invest nearly as much money as elder generations, which makes them not only harder to acquire as customers, but less valuable customers as well. They tried to put out some viral marketing, a Christmas advert which flopped on all levels and showed the company to be one of the most out-of-touch firms around today. And now, just 3 months on from that, they've decided that that slant wasn't going to work, obviously, and so they're moving overseas instead, trying to draw in new investors from Europe and Asia. Now, at least this idea makes a bit of sense. They can still target similar demographics and people who already like the alternative asset classes that Blackstone deals with without having to change their entire model. But once again, the vast majority of people don't understand just how rich Americans are and how poor everyone else is by comparison. If you're seeking to branch out into different countries like the United Kingdom, you best know in advance that there aren't many middle-class investors with $1 million in their pensions, and Blackstone's target clients are already massively overinvested into property, as it's the only asset class that really sees any sustainable growth in a broken economy like UK's. Blackstone are hoping that more traditional private equity might provide a breakthrough, buying companies, gutting them completely, loading them up with debt, and then exiting as much of their capital as they can to move on to the next poor business unfortunate enough to get bought out. But considering how Blackstone has already suffered from incredibly poor PR before, it wouldn't surprise me at all if we started seeing the media cycle take another shot at them, this time for the private equity practices, which almost always result in mass layoffs, crippled firms that go on to collapse, and worse outcomes for everyone involved, except of course for Blackstone. To say things haven't gone to plan for Blackstone is stating the blindingly obvious. The real question we ought to be asking is, what can we expect next? The company is an absolute behemoth. They have the size and influence to challenge governments directly and to enforce ESG mandates upon millions. And my gut, and the fact that their history is mired with instances of them putting profits above human utility, makes me think they will not quietly roll over and watch as their business falls into obscurity. We can expect more from Blackstone going forward, not less. Yes, their attempts to capitalize on the commercial real estate market were successful at first, but they've been a disaster for more than 2 years now. But what wasn't a disaster for them? Buying up normal homes and renting them out to people instead of selling them. Blackstone is essentially the curator of an entire class of people who can't afford to buy a home themselves, but can just about afford to rent one from a $1 trillion operation. My deepest fear regarding them is that this strategy worked for them. It made them billions of dollars in profit, and their core business outside of this is now wavering, so there is a high likelihood they push back into this business in an attempt to continue their ever-desired growth. And the one hope we really have of making sure this doesn't happen is, ironically enough, bad PR. You'll be forgiven if you don't remember, but a couple of years ago, Blackstone was accused by countless journalists and media publications and even YouTube channels like mine for buying up single-family homes. And it escalated to such a disastrous level for Blackstone that they put out a statement announcing that they would stop that practice altogether. But how long will that resolve last when their profits continue to fall? For that, we'll have to simply wait and see.